Investors and traders, welcome to the channel. Market chart by today is 15th of February 2025. Hope everyone is having a great weekend. We will be taking a look at the key markets for the US. And in this video, I will be focusing mainly on the dollar and key currencies, the bond market, and we'll take a look at the gold. It's really interesting what is happening with the gold. So it's going to be like part one, and then Sunday I will do another video in which we'll take a deeper dive into the stock indices, and we'll also try to cover some of the sectors. So we haven't done an update on the sectors for quite a while, so I think it's good to split the video into two parts. As always, the video is for educational purposes only. It is not a financial advice. We are taking a look at the dollar index, the weekly chart, and what we have seen is a dollar which has actually lost about 1.2% over the week. However, it is also approaching key support level around 106.15 and really close to 20-week moving average. Now, this is the region, the shaded region that we had been actually watching for quite a while as possible a good resistance level because of a number of ratios coming together, being the 61.8% retracement of these highs to lows right here, and the 1.272 expansion of this entire range. So what we are seeing is something similar to what we might have seen right here. However, we need further confirmation because what I am looking at is, which I'll show you on the daily chart, is a possible ABCD right at some key levels, which could be pretty good support, such as the 38.2% retracement of these lows to these highs right here. So it could turn out to be pretty good support as well. Now, if we just move down to the daily chart, and here we see that this is the initiated region, the pattern that we had drawn, and the market went right into it, and there was just no follow through. 1.618 expansion around 109.73 turned out to be pretty good resistance level, and now what we are looking at is possibly this structure we are in, which could see us. Let me actually try to draw this one, A B C D, which could see it move down to around 105.82, maybe into this shaded region. Now, one of the key things that we were watching for was if the price is able to close below 107, and in particular below the 27th of January highs, which it has actually done. But I would like to see a follow through for confirmation, and also because on the weekly chart we are actually also approaching um, key level of 38.2% retracement on the weekly chart. So we'll have to wait and see how the market, should it get into this region, will actually price action will turn out. So it does look like the dollar has a little bit more to go to the downside, and especially get to around 106.15 level, which is the 38.2% retracement, and this is the region where we could have pretty good support coming. Now on the flip side, if we just take a look at this on the Euro USD, and I am going to flip over to the weekly chart, what we can see is, here we go, this is the region that we had been waiting for. The market went into it around 13th of January. That's where also a major kind of a bottom turned out in the stock indices as well, and what we have seen is basically a range bound market, but pretty large range, and this zone is providing pretty good support thus far. It has a chance to get up to around 106, which will be the 38.2% retracement on this entire move, or leg high to low right here. And on the daily chart, here we go, we are actually completing an ABCD around this. So on the daily chart, it really needs to get above the 78.6% retracement. Fair amount of resistance coming from the structure, 78.6% retracement, and also the structure of possible ABCD right here, like this in this region. So important one to keep an eye on this one. We also have the hanger resistance from the 89 period moving average. Once it is able to get above these levels, I think then the dollar, the euro has more room to rally, and also on the flip side will be very close to some key support around 106.15 on the dollar, so on the dollar index actually. So let's keep on watching that. And if we take a look at the cable, cable actually went right into this 89 period moving average, finding resistance is right at this level of 61.8% retracement. If it's able to clear this, I think cable has a pretty good opportunity to rally quite a bit actually. And if we move down to the weekly, this is the big 38.2% retracement that came in. I was getting actually watching for a possible low to come in here, and the market on the 6th of Jan was actually quite strong to the downside. And the next week we did not see as much of a follow through, and then just no follow through in the 20th of January week, and we have seen the market actually um, move higher from this level. So really key, I think. Cable is setting up off the back of weakness in the US dollar to rally quite a bit, and we are just waiting or really watching this 61.8% retracement coming in around 125.70. If the market is able to close above two, ideally two consecutive closes, I would like to see above this level. I think it's got a pretty good chance to rally further higher, much higher. Now, one of the key pairs that we are looking at is actually the Japanese yen. So let's take a look at this on the weekly chart. Here we go. And it had a week in which it rallied quite a bit, but then on Friday gave up on it quite a bit actually. So we'll just keep on watching this one, because if the weakness is coming in the US dollar, it is likely to also impact this. But the another reason is, which I'll show you, is actually the bond market as well, because the 10-year treasury note actually hit a important support level, and if the treasuries yields are likely to move lower, this pair is likely to be impacted, and so is the dollar. But the dollar is also approaching a key support level. So a number of things happening in this on all these key interest rate sensitive markets actually. So there we go. We had this nice ABCD completing right at the 78.6% retracement. We saw a very nice rally, which took us to about the 78.6% retracement of this entire this swing high to low, and about 50% of this entire swing high to low. And then what we have seen is couple of days where the prices pulled back. So really important for us is this the low of the 7th of February. As long as it is held, I think it's got a chance to rally. So the dollar could actually get stronger versus the Japanese yen. Things will change quite a bit actually if this low is taken out to the downside. Then we are looking at the yen actually getting stronger. But here is one currency pair which gets its central bank, which is Japanese central bank. They operate quite a lot in the currency markets, and sometimes they're supporting the yen to make it weaker. Sometimes they want it stronger. So it remains a market which is which moves quite a lot now. Um, and if it begins to move higher, there's still a chance to fill in this gap. That remains a possibility, although it means the dollar getting pretty strong against the Japanese yen. Now, what is really interesting is if we just take a look at what happened in the interest rate markets by taking a look at the 10-year treasury notes. This is the yield chart for the 10-year treasury notes. On the y-axis, we see the yields. And if you recall, in the weekend video, I had actually mentioned that this 61.8% retracement was really key level for the yields because of this ABCD and also the symmetry. And we saw a nice rally in the yields right to the 61.8% retracement. However, what is really interesting is on the 13th of February, last Thursday, and then Friday, the yields actually moved lower. So that is off the back of the data which came out. So this big rise was because the CPI data, which came out a little bit harder than expected. This one is PPI related, and this is the retail sales. So that's the kind of data which might be impacting it, but from our perspective, it is really a range bound market at the moment, because we found support from the 61.8% retracement and resistance at the 61.8% retracement of this rally as well. And if we just take a look at this on the 10-year futures, you can see that here it had a we had this point come in where there were a number of things technically happening. We had the symmetry come in, price symmetry, and we also have time symmetry coming in. So it was a point where there was going to be strong resistance, and with the market to possibly change or turn. And this is what we saw for a number of days. One, two, in fact, it started pretty much right here. So 1, 2, 3, 4, 5 we saw the yields move higher till it hit that 61.8% retracement, and now it has had hit the 61.8% retracement of this high to these lows. So really interesting. I think there is a chance that if we see actually follow through, meaning the yields moving lower or the price moving higher for the futures contract, we could be in this, possibly this structure ABCD, as long as the whole lows of 12th of February are held like this. Which could see the market rally to about 110.15, maybe a little bit higher, and this is where we have pretty strong resistance, because that's going to be the 38.2% retracement of these highs to lows right here, from these highs to these lows, and it is also the 61.8% retracement of this high to this low. So we'll have a confluence of two ratios come together. So a pretty important area to always pay attention to, because whenever we have a confluence of two ratios pattern coming together, we pay really close attention to that. And of course, we'll also have this ABCD as well in an expansion, which I've not drawn here, but let me actually draw it like this, and so get rid of some of the unwanted ones. So we'll also have the 1.272 expansion of this BC swing come in right here in this. So this 110.15 to around 111, I think it's gonna be really key level to watch. If we are in this ABCD, that's our target. And on the flip side, we could have something like this. Here we go, which could actually generate a sell signal as well, pending price action. So there we go. So we are watching this. Most likely we are in this shaded region right here. Now if we take a look at the longer end of the curve, so this is the long bond futures, we can see something similar. Here we went into this resistance zone, and then for a number of days we went lower, and now we could possibly be in an ABCC structure higher. That remains a possibility. We got support coming, which looks like to be from a 50% level. Now on the shorter end of the curve, this is really interesting, because this end of the curve could get actually influenced by Fed's decisions, such as interest rate cuts, more than what it is doing to the longer end of the curve. So here the yields, when they were moving higher, it did look like maybe it wants to go and test these and maybe go a little bit higher to around 4.46, but it's actually stuck in a range, and it looks like the yields on the shorter end of the curve also actually want to move lower and test the lower end of the trading range. So really interesting what is going on with the yields. And with the yields moving lower and the dollar actually moving lower last week, the really interesting thing to watch is actually gold, because in the price action, the weaker dollar should actually help gold denominated in USD. But we also have this key pattern, which we had actually discussed as well. These regions come in as well. So it was a 1.618 CD leg of times the AB leg, and then we had a 1.618 expansion of this entire trading range. So technically we had two ratios coming together, and what we have seen is actually a range bound market, and then we saw gold actually move lower by on the futures chart by minus 2.15%, or $63.50 lower. So last time, if we just go back and see, whenever we had this is the time we had about 1.76% moved to the downside, and the dollar moved lost about 40, excuse me, the gold lost about uh, roughly $49. We saw a follow through the downside for a few days, and this is the really interesting one. We lost about $45 right here, or 1.61% to the downside, and we had a follow through the downside for quite some time. So again, I think what will be key is that maybe we are entering into a region where we could see, if we see a follow through, just the way we had follow through right here, and especially right here, we could see the market rotate lower, perhaps right into this 38.2% retracement. So 28.25 could be a potential target, maybe a little bit lower as well, which is the structural support. So right here, I'll draw this. This is where, we it could actually potentially move down to if we see a follow through. Now let me actually show this on the spot um, as well. So the spot, we have a similar kind of pattern, not exactly the same, but in the expansion it's really the same. So the spot and the futures chart, they got in line. And a really interesting thing is that on the spot, it's been a $45 move to the downside, or 1.57%. And last time we had a 1.56%, or nearly $44 move to the downside. We did see a follow through, and the market actually went lower in an ABCD fashion for quite a few. So if we just look at from the time, so about 2 weeks, it went into a corrective mode. So we have got some similarity coming in with the kind of sell-off that took place right here. So let's keep on watching this and see for a follow through, and then we could have a roadmap where we could be actually looking for a corrective move to the downside, starting from a few days, lasting into maybe a couple of weeks, for the gold market. So really it looks quite interesting. Now let's take a look at the silver. What happened in silver is there's a lot of volatility which came into the market last Friday. It went, I think, right to the 78.6%, which I've not drawn right here. Let me do that. Price was just not able to sustain this move. Sellers came in and actually closed lower below the 61.8% retracement. So it doesn't look like a very bullish price action at all. And if we begin to see follow through, I think silver got a chance to move lower right into this. What we have is our dynamite triangle right here. So it's got a chance to come back and actually test this upper boundary. So this is something which we could be looking at. So this is what we are watching in the futures market and some of the forex markets that we like to follow here. I will be doing another part tomorrow, where I will go deeper into the stock indices, and we'll also try to take a look at some of the sectors, because I believe there is a rotation taking place underneath the surface of the indices, and I think certain sectors are actually benefiting. So we should be able to pick some clues on the kind of rotation that might be taking place. So this is what we are watching in the key markets, and there will be a follow-up video tomorrow. And if you happen to like our technical analysis, how we look at the markets using pattern recognition and Fibonacci retracement, then please do subscribe to the channel. And if you do, then hit that bell icon button. That way you will know when the new videos are posted and you will not miss on anything. And if you learned something from the video, then please do hit the like button. Thank you very much. Good luck, good trading, and speak to you guys soon.